All right, so let's talk about a 1% down program, because after all, who wants to come up with more money when you don't have to? Now, the interesting thing is that there's actually two different 1% down programs available. They just came out in the recent weeks. They've been extremely popular. We've been getting a ton of questions about it. We got a lot of people out in the market actually using this product already. And in this video, I'm going to give you the details about both products so that you can make an educated decision on what product makes the most sense for you. I'm going to tell you what I think is the best product, and at the end of the video, I'll show you how to get pre-approved for these programs if you'd like. Now, before I dive in, do me a huge favor, tap that like button, and if you're not already a subscriber to the channel, make sure to hit that subscribe button so you get more videos like this. All right, so let's dive into this. Now, I'm a mortgage broker. I've been doing this for over 20 years, and I eat, breathe, and sleep this stuff. And from time to time, lenders will come out with some pretty cool loan products. And recently, UWM, United Wholesale Mortgage, which is the #1 lender in the country, along with Rocket Mortgage, which you probably heard about them before because they advertise at the Super Bowls. Both companies came out with their own version of a 1% down purchase loan. All right. And like I said, I'm going to give you the pros and cons of both programs, share the differences, and then tell you which one I think is better. Now, before we dive into the differences in these programs, let's just speak in generalities for a minute. So when you're buying a house, if you're using a conventional loan, which is like 90% of loans that are done, you typically have to make a 3% down payment. So the way that these programs work is that you would come up with 1% and then the lender covers the other 2%, making it a 1% down loan, even though it's really a 3% down loan. Okay. Now, both of these programs, both the UWM and the Rocket program, they're both utilizing Fannie Mae and Freddie Mac's affordable housing programs. You might find them on Google. They're called Home Ready and Home Possible. And the cool thing about those programs is they have reduced rates, they've got reduced mortgage insurance, so it's a great tool to buy a house with if you're eligible, okay? Now, one of the caveats for being eligible, whether you're doing the UWM or Rocket version of these loans, is that because they're tacking on to a affordable product, you have to meet what is called Area Median Income, or AMI. In the description, actually, we included the link to Fannie Mae's AMI lookup tool, and it's based off of what county you are going to be purchasing the home in, okay? And so every county in the United States has their own Area Median Income limit, all right? And in order to be eligible for these affordable products to do the 1% down program, you need to make no more than 80% of whatever the AMI is for the county in which you're buying the home for. So as an example, if it was $100,000 of the AMI, 80% of that is $80,000. So if you made more than $80,000 in that circumstance, you would not be eligible for one of these programs, okay? But if you make below that amount, then all you have to do is meet just the standard underwriting guidelines. You don't have to be a first-time home buyer, which is a really important detail because a lot of times when you're getting assistance as a home buyer, one of the caveats is that you're a first-time buyer. That is not the case with this. In fact, probably the most difficult part of qualifying is basically you got to make under that AMI amount, which roughly about 40% of people in the United States are going to be eligible for these programs, depending on where they're located in the country and the cost of the real estate. All right, so I gave you some general information about the down payments, about kind of the similarities between these programs, but that's where the similarities stop. So let's dive into the differences between both of these programs. And let's start with UWM's 1% down program. All right, so this is a great program. UWM will pay 2% of your down payment up to $4,000. So basically where it is no longer a 1% down program is if your purchase price is more than $200,000, then really it's not 1% down. You're actually just getting $4,000 for free. So, nothing to be upset about. And then you would come up with the remaining down payment. So the remaining, whatever's left in your 3% requirement after the $4,000. That's how that piece would work. Now, one of the benefits of the UWM program is that the max loan size that they'll allow this program for is $726,200. That's the conforming loan limit, all right? And that's a big difference between Rocket's program, where they cap it at $350. And I'll talk about why that's more important here in a second. But with the UWM program, they'll allow you to take advantage of this even if you're going all the way up to a $726,000 loan amount, okay? The other thing is that UWM does not limit your down payment amount. So let's say that you're taking advantage of this grant program, but you're actually putting 15% down or 20% down or whatever the case is. You can still take advantage of this program, assuming that you meet the AMI requirement, and get that free $4,000. Now, the downside with the UWM program is you are going to have a monthly mortgage insurance premium because you're not making a 20% down payment. At least I'm assuming you're not. Most people won't. Now, the cool thing though is that UWM, like I mentioned earlier, they're the largest lender in the country, which means that they have economies of scale, which means that the mortgage insurance rates that they charge are cheaper than any other lender in America. So although it sucks that, yeah, you got mortgage insurance, it's gonna be really cheap. So it's not that bad of a thing, actually. Now, UWM, they don't allow you to use this program for duplexes, triplex, fourplex. You got to buy a single family residence, a condo or a townhouse, or a manufactured home on a permanent foundation. So the UWM program's awesome. I really like it. Depends on what market you're in terms of which one makes more sense, honestly. I mean, it just comes down to how much money you need to borrow. And that's really kind of dictated by what market you live in. You know, if you're in a high price market, the Rocket program's probably not going to make sense. And I'm going to explain that here in a second. If you are in a high price market though, the UWM program's a great way to get some free cash, and you get to use their amazing system, which makes the process fast and easy. All right, so let's flip over to the Rocket program. Okay, so the Rocket program, they'll give you $7,000 grant money to be used towards your down payment up to, you know, they cover 2%, you pay 1%. Now here's where that kind of fizzles out depending on what market you're in, is that they limit it to a $350,000 loan amount, which means that if you're in a high price market and you're not putting a big fat down payment, let's say your average sales price is $500,000, $600,000, $700,000, the Rocket One program is not gonna make sense for you. You're just not gonna be eligible for it. They don't offer it. So in that circumstance, you're gonna slide in and take advantage of the UWM program and get your free $4,000. But let's say that you're in a lower price market and your loan amount's gonna be under $350,000. Well, you could get up to $7,000 from Rocket if you're using this program. The other thing about the Rocket program that's different from UWM is that Rocket does not charge mortgage insurance on their monthly payment for using this program. They bake it into the interest rate. So one of the things that's really important when you're comparing, let's say that you're in a market and you're eligible for both products and monthly payment is the most important thing to you. Well, one of the things that you're going to want to do is do a side-by-side comparison of the UWM and the Rocket program, because the interest rates aren't going to be the same. Ultimately, you're going to be looking for whatever the lowest payment is, not, you know, okay, this one doesn't have mortgage insurance, this one does, so this one's better automatically. Well, if this one's got a lower payment, even with the mortgage insurance, then that one is going to make more sense. Now, something that's important to point out about both of these companies that are offering these products is that UWM, they will not work with you directly. They only work with wholesale mortgage brokers like New Way Mortgage. And so if you wanted to take advantage of the 1% down program, you got to call somebody like us. We'll take care of you. We'll get you pre-approved and get you that program. Now with Rocket, they kind of play both sides of the fence. You can call them directly, or you can go straight to a mortgage broker to get the Rocket 1+ loan. Now, I know that I'm biased because I am a broker, but I'm telling you guys, don't go to Rocket directly. Here's the thing, is that you're gonna work with an inexperienced call center loan officer on a purchase loan. The last thing that you wanna have happen is you get a pre-approval from them, you think that you're good to go, you go out in the market, you get your offer accepted, and then you find out that you don't actually qualify. Guys, experience matters. And Statistically, you're gonna get a better deal by working with a mortgage broker. So literally, if you compare the offer that you get from Rocket Direct and then Rocket Mortgage Broker, the Rocket Mortgage Broker is gonna have a cheaper deal than getting it from them directly. I know that's kind of crazy, but that's how the business model works. So both of these programs are available from New Way Mortgage. If you guys have questions, put them in the comments below. And if you'd like to talk to somebody on my team about how to take advantage of one of these programs, we'd love to have a free, no hassle conversation with you and talk about your options, answer your questions, and take it from there. If you want to schedule a call, click the link in the description below. We'll talk to you then. Thanks for watching this, and we'll see you on the next video.